Right, where should we start? Not a lot happened yesterday, so there's nothing dramatic to report this morning. But let's crack on with the markets that we've been following. So Aussie Yen, I just want to remind you that we've got this 500-week moving average resistance. We're back up against it now. That comes in at around 84.50, 84.70. So I just want to remind you of that. We've really been struggling at this resistance level. As you can see, the blue line really acting nicely as resistance. Yesterday, this is the weekly chart. So last week we tried to push above that 500-week moving average and then close the week below it. Again, this week we're trying just a little push above it. We're only about 10 pips above it. So we'll see if it holds. Tomorrow's Friday. We really need to see a weekly close above all these little peaks. These little peaks are at 84.47, 84.45. What's this peak up here? 84.70. Last week's peak is 84.99. So we'd certainly need to see a close above 84.70 on Friday for me to be more bullish on this. But for now, I think that we've hit quite a strong resistance level. So let's see if that one does pull back. Aussie dollar, we're monitoring that head and shoulders pattern, potential head and shoulders pattern. We can see that on the daily chart. Left shoulder, head, right shoulder. A bit of a recovery yesterday. So frustrating, these markets. Look at, as I've said before, up, down, and then down, up, down. Yesterday, a big down day on, what would that have been? Tuesday. Wednesday, recover most of the losses. Thursday, we've retested the moving averages down here, and now we've bounced. And, as you can see, one big sideways direction. Over the last 5 days, we've held a range from 77.83 down to 76.73. So 110 pips range for a week. That's not a huge range, but we'll see. Eventually this pattern might develop and it might give us a nice trading opportunity. Canadian dollar versus Japanese yen, also looking at some resistance. We've got the trend line, as you remember, hang on, let me just check what we've got there on my notes. 16-month trend line resistance, haven't we? No, we haven't. That's where I've got so many markets to look at this morning. Right, we've got the 14-year trend line and the 200-month moving average, actually, 89.00. So we have got a lot of resistance up here. The 14-year trend line, I can't show you on this. It's going to go too far back. But I just want you to be aware that, again, we've got this resistance level up here. Now, we've got to watch for a double top on the 4-hour chart to see if this resistance level holds. You can see we've drifted lower and drifted back up. So just watch that 89.15 level. Where would I want to be out if we break up? Let me just have a look at my notes. Euro yen. Yeah, 131.50. Sorry, CAD yen. Keep looking at the euro yen for some reason. CAD yen. So I think that we'd really need to break above 89.60 for me to think that the Canadian dollar will continue higher against the yen. So really we are bang on the resistance level. We're going to watch for that double top. We'll re-examine that tomorrow morning. But we've got longer term resistance levels. So really stop needs to be above 89.60. But the downside potential is so big, even just looking at the weekly chart. The week before last we had such a massive up candle. It wouldn't take much for us to be 100 pips lower. The first target would be down at 88.30. So as I said, I'm trying to look for longer term swing trades because right now, in the short term, there's not much going on. Euro versus the Canadian dollar. Okay, this is a new one. We didn't look at this yesterday, but I've been trying to find other opportunities. Let me just have a look over there. Okay, so here we go. Right, Canadian dollar, euro versus the Canadian dollar. Now then, we're just approaching what looks like a good support level to me. Let me just scale that. Here we go. Again, longer term chart. We're on the weekly chart here. This trend line goes all the way back to April 2015. So it's a major trend line. It's an important one. We've got the 500-week moving average just below at 144.60. So that we've also got the 38.2% fib. Now this is a very long-term fib, of course. This goes all the way back to August 2012. So these are nice big important levels going back multi-years, and this is something you've got to get used to looking at because these really are important levels. 146.20 with the trend line at around 145.70. Okay, it is a 50 pip range. It's quite a lot of wide range to get into, so we're going to monitor this and see if we get down to test this important support level, and then we've got a stop below maybe 144.50, so it's almost 100 pip stop. So it doesn't matter that you're trading longer term. This is an opportunity for us to understand how to trade these longer term levels. Normally I'm looking at 1 hour charts and 4 hour charts, but obviously with the inactivity and markets holding within 50 to 100 pip ranges this week, there's not much point in focusing on that. So this is a chance for us to look at how do you look at longer term charts? How do you look at daily charts, weekly charts? How do you find a trading opportunity? Where do you put your stop? And what's the profit potential? And this is what we're seeing here. So getting in across the 50 pip range, it's not a huge range, not a big deal. With 100 pip stop, again, not a big deal. You just make sure your size is a lot smaller than it would be if you were trading short term and you're only risking, say, 30 pips. Here you're risking 100 pips, so maybe your size is 3 times smaller, but the profit potential on these trades is also very big. You start getting a bounce back, we'll be looking at 100, 200, even 300 potential pips profit on those trades. So let's keep monitoring those and see if that opportunity does come up. We only need to come off another 100 pips on this one, so we'll watch it during the week and see if that does develop into an opportunity. That's the Euro CAD, right? Euro Yen, which I was just getting confused with the Canadian Yen. Let me get my levels right here. Okay, so this is the one with the 16-month trend line. Yeah, we've been following this for a while now, so it's no news to you. Okay, there we go. Again, the trend line, the big trend line, the one that we broke above last week with a false break, back below it, same thing this week, a false break up, and now we've got a red body candle on the weekly chart. This is well, you know, these long upper wicks indicate that every time the market goes up, the sellers come in, they push the price back down again. So we're monitoring that situation. What have we got on the 4 hour chart? I'm going to have a look at the daily chart as well. On the 4 hour chart, we're holding the 50 period moving average. As you can see, that might act as resistance today. Let's see what we've got on the daily chart. Any negative candles from recently? We've got these spike ups. You can see big red body candle, the spike higher, the shooting star with the small body, indicating again sellers coming in. Just starting to drift off. Bit of a recovery today, but watch that trend line, which I would say is around. I would say is around 131.56. 50.70. Okay. Let me just see. Right. Let's move on to the Euro US dollar. So Euro US dollar is trading within sort of 100 pip range, but you know, it gives us a scalping opportunity within that 100 pips. I think the clearest way to look at it is, remember we had resistance up around 120.60, 120.80. That's some fib levels up there, the 100-day moving average. I suggested that we would have good support around the 119, sort of 65.45 area, around the middle of the 119 area. Where did we get to yesterday? I'm just looking at it on the daily chart again. Yesterday's low was 119.85. So closing in on that lower level, we'll see if we find good support around 119.50. I think we will, and still I'm expecting strong resistance around 120.60, 120.80. That's working out fine so far this week. Pound versus New Zealand dollar. Right, we've got some good support on this one. I think I'm just going to show you on the weekly chart. Weekly chart. Am I? No, you can see the trend line, but let's look at it on the daily chart. That trend line will be replicated on the daily chart. Okay, here we go. So we've got good support down here at around 192, 192.20, I would say. What have I got on my notes? 192 GBP NZD. Yeah. Yeah, I would say from around 192.10 down to around 191.70, because we've got this 50% fib down here and we've got these swing lows. So it's possible we overrun the support a little bit, but it is a good support level. It's on the daily chart, so it's not that long term. We're not too far away from it. We're trading at 192.60. So we drop another 50 pips or so, we're going to start hitting this support level. This is in the pound versus the New Zealand dollar. So just watch that one. And again, it's not a big risk, because if we're buying around if we're looking along at around 191.10, 192.10, 191.90 with a stop below 191.70. So let's say you put your stop in at 191.60. That's a pretty low risk trade. Buying into a nice strong support level in what is a bull trend, just about. When you look at the daily chart, you can see we are moving up, but we've had a significant correction. So let's hope that this significant correction holds the support level again. It did the last time at the end of April. So if we test it around the beginning or the middle of May, hopefully we'll bounce off there and eventually we'll get a good run. So we'll watch that one too. Maybe we can test that level tomorrow in the pound versus the Kiwi. Cable is just an example of a nice sideways market that you can trade well within the parameters. I'm not going to go on about this too much. We looked at this yesterday, and as you know, we've got good support down around 138.00, 137.80, and then we've got the upper trend line at 139.90, 140.00. If we break below 137 65, maybe 137.60, we can test the lower trend line down here at 136.70, 136.60. So that's just, there are a lot of sideways markets like this. Well, the Aussie is a perfect example. I know we've already looked at it, but if we look at it on the 4-hour chart, actually, do you know what? I'm going to show you on the daily chart. I'm just going to zoom in on the daily chart. This is quite remarkable. Not something you often see, but just look at these red candle, green candle patterns. Green, red, green, red, green, red. You know, remarkable. I'm not seeing that for such a sustained period of time. Right. So yeah, lots of sideways stuff going on. Dollar Canadian pushing that lower trend line again. Actually, we're really testing it today. We talked about this yesterday. This trend line goes all the way back to, here we go, 1st of September. So it's a multi-month trend line. I think I want to grab this and move it up a bit. Just let's examine exactly how closely we are on this trend line. I'm just going to take these fibs off, actually. That's better. I can put them back on again. Come on. There we go. Right, so yeah, we're bang on the trend line again. Can you see that? It's a little bit tricky because I've suggested we might bounce off it, and we have a couple of times, but we keep coming back to test it. And because it's a descending trend line, we can keep making lower prices each day, but still hold the trend line support. It's one to watch. It's one to see if eventually we have a real nice bounce off it. You know, we are very oversold. You can see that. If I take this down here, look, this is my slow stochastic, and I'll open it up here. This is my slow stochastic. I like to follow the slow stochastic. I usually put it at the top of the chart because I don't want to take up too much room at the bottom. But every now and then I'll bring it down, just have a look. Look how oversold we are. So compared to where, let me get some crosshairs on this. Okay, so right here, we're getting very oversold on the stochastic. Right here, we were very oversold on the stochastic. And look how nicely we bounced the last time. This was around the 18th of March. Real nice bounce. We got from around 123, let's call it 123.40 up to 126.30. So we had an almost 100 pip bounce. 100 pip bounce would do fine for me on this little run. That would take us up to sort of 123.60, which would be up around here, which is around the high of the week so far already. So that would be our first target if we can get a bounce. What about down here? Did we get a decent bounce? Yes, we did. We got oversold. Well, we got two very strong days when the market became oversold down here on that trend line. You get my point. This one actually didn't work. We got very oversold and the market continued lower. So it's not foolproof, but we'll see if we do get a good bounce on this one. I'm going to put that back at the top of the chart and scale this so we get back to normal. And then we're going to have a look at the dollar yen. Dollar yen levels have been good. Not so much movement again, a little bit quiet. We're waiting for some sort of breakout. When we get the breakout, we will see some really good moves in these markets. We've just got to be patient. We've got to wait and jump on a trend when it does move. Again, we're seeing quite a lot of green candle, red candle, green candle, red candle this week. So a lot of consolidation in the markets. We had strong resistance up around the 109.60, 109.70 area. That's working. We've got very strong support down at 109.00, 108.80. That's also working. That's my range for the day today. Again, the range was a lot narrower yesterday, but those would be my parameters for today. So we'll see if we get anywhere near the upper 109 area, and the lower 109 area is definitely a good support level. We've even got the 50-day moving average coming in there at 108.85, lending extra weight to that sort of 109.00, 108.90 support area. Held all week. Let's see if it holds again today. Gold, tricky one. We're back up to the resistance level. Now, this is an important resistance level in gold. The 100-day moving average has been doing just a perfect job. The yellow 100-day moving average has been doing a perfect job of resistance in gold. It's caused a sideways consolidation for quite a long period of time, ever since we peaked on the 21st of April. So what's that? We're talking about 2 weeks ago, a little bit more. We're about to test that level again. We've got 1797, 1800. That's my big resistance level for the day. Now we start breaking above 1805, then I think gold will start the next leg higher in what I have talked about being a developing bear bull trend ever since we double bottomed at that strong support level. You know all about that. If we can't beat sort of 1797, 1800, then I'm sure we'll be drifting back down towards 1770. That's going to be the first target, 1770, 1769. Well, actually, to be fair, we've got a little bit of support at 1780 today, and then further support at 1770. So watch those two support levels, 1780, 1770 on the downside if we cannot get through 1797, 1800. If we start breaking above 1805, I'm going to start feeling a lot more bullish about gold. Again, we will look at that tomorrow. And what will I finish up on? Nasdaq. Okay, Nasdaq has had that big dip. It was all triggered by Yellen talking about potential interest rate rises and then backpedaling quite quickly. Someone must have had a word with her and say, hey, slow down, you're going to cause the markets to have a big tumble if you start talking about higher interest rates in the US. So she backpedaled and the markets recovered, but not significantly in the Nasdaq. I really do think that this is it is something of a bear trend developing. It may only be short term. I'm not saying this market's about to collapse. I'm not saying that it's a huge shorting situation, but I have talked about the Nasdaq potentially heading lower for, actually it's getting on for weeks now. I've been talking about right back here. I was talking about 14,000 being a really strong resistance level, and that was 3 weeks ago. We retested it. I talked about a potential double top. That has happened, and now we're starting to see a sell-off. Let's have a look and see where the market might peak today. Let's put some Fibonacci levels on there. You know I like these. There we go. So already you can see that the 38.2% fib at around 13,650. That was a real nice resistance level that worked yesterday. Where was the peak? 13,675, almost bang on that level. Market tumbled from there. So on the 4-hour chart, now we seem to be holding the 23.6% resistance level, which is at 13,555. We haven't managed to get through there on the last 3 candles of this 4-hour chart. We would need to get above the 5, no, that's not the 5, that's the 200 period moving average on the 4-hour chart if we were to retest that resistance level around 13,650, 13,700. So just bear in mind, we need to get above 13,580 today if we're going to retest resistance at 13,600, 13,650, 13,700. There's a lot of resistance. If we get further, then we've got resistance at 13,800, 13,850. We've got the death cross, the negative cross on the moving averages on the 4-hour chart, adding to the negativity here for the Nasdaq. These bulls really are coming under pressure. Look at this nice, clear moving average crossover I like it when the moving averages have been far apart like this, then they converge together, and then you get the nice clear cross. I like it when both moving averages have already started turning down. Not when you've had some sideways flatlining and then they kind of cross over. It feels a bit wishy-washy to me. This feels a bit more clear. It feels like the market's this is a real clear death cross. Let's have a look at the 1 hour moving average, because I'm no doubt we've got some significant moving average crosses on there too. We most certainly have, of course. Again, this is what I'm talking about, a little bit wishy-washy, because we kind of flatlined for quite a long time. But nevertheless, we do have a negative moving average cross. These are more significant. These are more significant over here. This one I'm not so keen on. This is more significant, the way the 100 has crossed over below the 200, and now the 100 has crossed below the 500. The 50 has obviously crossed below the 500 as well. And look, we're about to get a negative 200-hour moving average crossing below the 500-hour moving average. Again, this is really quite negative now. As I suggested, the Nasdaq could start to head lower. It already is, and these hourly moving average crossovers help to give me more confidence that the market is going to continue lower. Maybe these interest rate worries will really start to grip the market. Having said that, the S&P is holding its own. More of a sideways trend in this one. We are looking at the 4 hour chart here. I'm going to blow this up. Now, again, slightly negative tone coming in. I'm not saying that this is a market that should be shorted necessarily, but it's certainly a market that needs to be monitored. Look, the 61.8% fib in the short term, coupled with 50 moving average on the 4 hour chart around the 41.80 level, has held. That must have been yesterday, the 5th of May. It was. We got to a high of 41.87, pretty much bang on that resistance level. Now, it's only a minor resistance level. It's on the 4 hour chart. It's not on the daily chart. It's not on the weekly chart. But look, it's held. Now we can't get above the 100 period moving average on the 4 hour chart. So let me just put this up for you so you can see more clearly. So again, just some short-term negativity creeping into that US market. This is how things start, isn't it? So to keep an eye on that, the 50% fib at 41.75 coupled with the 100 period moving average on the 4 hour chart is now the resistance level. 41.75. 41.85 is also going to be a resistance level for today. So watch that 10-point range. Now, if that holds, we can start looking at this potential head and shoulders pattern I talked about yesterday. Left shoulder, head. This is possibly the right shoulder, and it certainly is developing at the moment. The resistance levels are holding. Now, the neckline comes in at 41.30. This is what we're going to be watching on the downside. Keep an eye on it today. 41.30. We start breaking below 41.25, and I would suggest that it's only a small head and shoulders pattern, but it's still significant. We've had some pattern failures recently with all this sideways movement. So hopefully now these markets are going to start to move, and we can start to rely a bit more on these patterns and see some significant moves when these sideways moves break. They'll break eventually. They always do, and then you get a really good move. Right, the peak is 41. I'm going to call it 42.19. The low of the trough is around 41.27. So let's call it a 90-point move potential to the downside. If we break 41.25, we could be looking at 40.35. That takes us down to around here. So a significant move to the downside still. Let me just see if 40.35 is an important level on the daily chart before we finish off for today. 40.35, yes it is. It's bang on the 50-day moving average. Funny how these things often line up. I bet if I put some fibs on there, that would be an important fib level as well. We'll have a look at that tomorrow if the market does break. So 40.35, this would be your target on a break below 41.25. Nice support from the 50-day moving average. As I say, we'll have a look and see if that is has support from fibs and other bits and bobs, other trend lines tomorrow if that was to break, because that might then be a buying opportunity. That might be a completion of the pattern. The top measured target hit, the bulls will step in. The bulls will always be stepping into stock markets on a sell-off. They're committed to buying the dip, as I'm sure you know. Okay, I think that's all for today. How are we doing for time? Yep. I think that's all for today. Hope you found that interesting. Please join me again tomorrow at 7:30. We've got some real good patterns lining up. We've got some real good longer term support levels to look at across these markets. So some big opportunities coming. Watch gold at 17.97. We've crept even higher as I speak now, 17.93. So we are creeping up towards that resistance level in gold now. Okay, that's it for today. Thanks.